Hello and welcome to the Cryptocurrency News Channel. This is the TA chart and FA analysis for February 22nd, 2022. And I want to talk about a little theory I have right now. And I think some people have been parroting this, is that the war is already kind of priced into Bitcoin. And we could actually be at more of a local bottom because things did escalate today as Putin confirmed sending troops into the two regions that are occupied by Russian-backed rebels. And the UN has sanctioned Russia. And if you actually have been following the news, President Biden actually did show new sanctions against banks and individuals of the Russian Federation. So it is actually escalating, and the ruble is actually dropping. Now, Russia did actually sign a bill today saying that Bitcoin's allowed for investment but not allowed for payments. That might be a way for them to actually store money into Bitcoin and away from the ruble during this crisis. I'm not really sure. It's a theory, but maybe not one that has too much backing, but it is possible. But as you can see from both both trading view and from CoinMarketCap, Bitcoin on the 1 day is actually up, no matter how much you put it. In fact, it is about $1,000 up from where it was this time yesterday. Now, since the situation has been escalating, you might wonder why that is. And that's because, like Bitcoin generally goes down when there's something like big surprise that's actually bad. Like if everyone was happy and then Putin's like, we're invading right now without warning anyone, then Bitcoin would really drop. But they've been priming us and the markets for the last 2 weeks that Putin was going to invade. And now that he actually did invade, everyone was expecting it. They might have already priced that in. So today was not as bad as yesterday. When Putin recognized the independence of the Russian militia-backed areas of Ukraine, everyone was taken back by a little surprise. But now that everyone expects things to go in, we might actually be at kind of a standstill. We actually might be at kind of a local bottom. Now, a full-scale invasion would be another jolt, but I would only expect it to dump 1,000 or 2,000 more points. I do kind of expect it to hold at 30,000, if not more. Because, if the crypto prices were deteriorating the same as, the diplomatic situation, I would expect today to be at 35,500, possibly 34,000, but it actually went up to a positive $38,000. So our technical analysis is going to be a little bit based around that. Maybe people are actually pricing it in, and maybe Russia is actually buying some of that Bitcoin to offset the loss in their ruble. So if you actually look at the 1 day chart, yes, it is still very, very strong sell, but it's better than it actually looked yesterday. The average directional index is very weak, and both the stochastic and the commodity channel index are buys. Plus, the momentum, because it swung from negative to positive, it's more positive today than yesterday, it's actually at a buy as well. So the indicators for the short term actually say buy. Now, the moving averages are still sell because we're still down way too much over the last week or two. But I think if we recover another 1,000 points, 1,500 points, we will actually be at a buy at the 10-day moving average. Obviously, long-term wise, it's definitely sell because the 50 moving average is way below the 200 moving average. So it's still a sell for the long term, and I still wouldn't buy anything right now because things are very volatile, and I don't know if it's going to move to full-scale invasion. And plus, the sanction and economic wars could actually take a toll on the world economy, which would actually take a toll on Bitcoin as well. So it's still very, very tenuous if you want to buy, and I actually wouldn't buy, but it's not quite as bearish as yesterday, because yesterday I thought we were going to drop way, way under because of the diplomatic tensions and the geopolitical tensions. But right now, what I'm seeing is a little bit different, whereas the market, especially the crypto market, has already priced this in. And sometimes the crypto market may be like, you know what, maybe rising oil prices doesn't really hurt crypto. It might hurt Bitcoin mining, but that just means the floor for Bitcoin could actually be higher. So essentially, maybe crypto already priced this in and it's rethinking the dump, or maybe some people are buying the dump. Remember, Russia did pass that law, like I said, that allows people and individuals, especially high net worth individuals, to invest in crypto. So maybe some of those oligarchs and Putin himself are storing money in crypto, and that could be part of it as well. But realistically, I do think the dump has halted for at least for now. And unless like he fully invades tomorrow, it might actually hold this price or possibly go up higher. If you look at the Dow Jones futures, we're actually plus 88 points for today. So if he doesn't fully invade tomorrow, there's some chance that it could actually go up higher. I really wouldn't bet on it just yet, obviously, but it does look better than what it did yesterday. On the weekly, we're obviously still at a very strong sell point. The oscillators are neutral, and basically we're negative all the way down to the 50 SMAs and EMAs. So weekly wise, any period longer than a day, it's definitely still a fairly strong sell because the geopolitical tension is still there. And I don't think we're going to resolve it in the matter of a few days. The thing about this particular conflict is that Russia has a geographical advantage over us. We're like half a world away. This is like China and Taiwan as well. We're like half a world away. It's right on their doorstep. So it's logistically, it's much easier for them to move troops there than for us to move troops there. And Europe doesn't really have much of an army right now. And plus, the third largest army, which is China, is kind of allied with the second largest army, which is Russia. Now, they're still far, far behind the United States in terms of army power, but like I said, logistically, they have quite a huge advantage on the United States. So, because of that, the EMAs and the SMAs are still screaming sell, and I overall agree with them that it is a seller's market indeed. So that's what I have right now. On the monthly, obviously, it's still going to be sell. We're still way lower than where we were on the yearly. We're almost lower than where we were on the double year, 2 years. So essentially, long-term moving average, at least out for the next few months, is definitely still sell. The oscillators are neutral. But until like geopolitical tensions ease up, and until like we see what the Fed's going to do with the interest rates, it's going to be sell. So TA is pretty much like maybe for the 1 day you could get maybe a small reprieve, but overall it's still all pretty much sell. Now the Fed interest rates are going to be interesting because Russia invading and the economy being put into harder times could actually get the Fed to back off on interest rate hikes. I still think we're going to get one in March, but the thing is they might only hike it up 3 or 4 times instead of 6 or 7 like they were planned. So we could actually have that effect too. Prices are probably going to be higher. Consumer confidence is going to be probably pretty low, and I think it will probably remain that way for at least 1 or 2 months, at least until we start resolving this Russian tension. But that's all I have for today. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.